Hi everyone, welcome to today's video. So on today's video, I'm going to talk about a very interesting stock. It has fallen by roughly 40% from its peak. It's a market leader, but its current business model is being challenged by other players. So we will understand whether or not you should be taking positions in this stock or should you be avoiding it, waiting it, what precisely you should be doing in this stock. So which stock am I talking about? I am talking about Jubilant FoodWorks. A lot of you have requested me to make a video on this topic. So here it is. It's going to be a super interesting video because I'm going to talk about number one, which food tech stock I am very bullish about. And I have just started to take positions in that stock. I believe that it will grow in the future. So I will reveal what that particular stock is. So let us get the discussion started. Also a very quick shout out to our sponsors for today, which is Vested. It's an excellent investing platform in case you're looking to make investments in US stocks. I personally use Vested. In the interest of full disclosure, I am an investor in that company now. Why? Because I absolutely love the product that Vested has created and therefore I'm backing the company. You can check the links in the description box. You will get a special link to open your account. So you could consider doing it in case you are making your investments in the US. So let us get the discussion started. And point number one, let me very briefly talk about the price movement in this stock as of now. So the stock from its top fell by roughly 50% from its peak and then it started recovering and now the total fall from its top has been roughly 40%. So Jubilant FoodWorks has shown a lot of correction. So many of you might be wondering what exactly does Jubilant FoodWorks does. So let me very briefly talk about that. So you might have eaten pizza from a brand like Domino's. So you know Domino's Pizza. Jubilant FoodWorks runs the operation for Domino's Pizza. Additionally, it has started to launch several other brands. For example, Dunkin' Donuts is another big brand that Jubilant FoodWorks owns. It is also bringing some international brands like Popeye, which I will speak about on the video subsequently. So in simple words, Jubilant FoodWorks is creating a series of different brands which cater to different set of audiences. For example, Domino's Pizza, pizza category. Then you have Dunkin' Donuts, donut category. Similarly, Popeyes, which is again a competitor to KFC. So Jubilant FoodWorks is trying to create a series of niche brands in different food segments. So that is what Jubilant FoodWorks does in very simple, easy to understand language. So if you check the current standing of the firm, let us quickly assess where the company currently stands. So the company does very well when it comes to pizza category. So you can clearly see that Domino's Pizza holds roughly 70% of the pizza market share in India. This is the good part. But if you go a couple of years ago, you will see from the chart that Domino's used to have roughly 77% of the market share, which has fallen down and has come to 70% in the pizza category. Now, is this good news? Is this bad news? Is that something you should be worried about because the overall food tech market in India is growing? But a company like Jubilant FoodWorks is losing its market share on one of its flagship products, which is pizza. So for this, you need to understand where the food tech industry is heading. So there are three specific categorizations on these lines. So first would be traditional restaurants. This is how the normal restaurant industry has operated for decades now, that you have normal branded restaurants where you go, sit, eat. That is the normal traditional restaurant. Now, what is happening in these normal traditional restaurants is that number one, the franchisee business is picking up. For example, Barbecue Nation has become a big franchisee business. Similarly, if you go to Hyderabad, so you have biryanis like Paradise Biryani, which is again becoming a very big chain. Now, even celebrities are getting into this restaurant business. For example, there is a restaurant called as Yellow Chili, which is run by celebrity chef Mr. Sanjeev Kapoor, and a bunch of other chefs or celebrity chefs are getting into this equation. Similarly, Virat Kohli's team also runs a chain of restaurant in India. So this traditional restaurant business is getting more celebrity driven, or it is becoming a franchisee driven business. So as a result, what has led is that small restaurateurs, they have entered the quick service restaurant space. So recently I went to Goa and there was this restaurant where I went and it was running 4 different restaurants within that shop. So it was running a dessert based business, then it was running like a proper food business, then it was running a snacking business also. So what I'm trying to tell you is that these QSR or quick service restaurants are becoming delivery focused. Their primary goal is not to get the customers in and make them eat at their place because that becomes more expensive for them. What they do is that they cut down on the rental value of the property that they are renting by running 4 or 5 different chain of restaurants there. So this QSR business is picking up. Now, third and finally, you have like monopoly business that is shaping up here, especially by Zomato and Swiggy, and they are dominating the logistics space. Their viewpoint is that, you know what, whether you're a traditional restaurant, whether you are QSR, you will need our logistics service. And that is where Zomato and Swiggy is capturing a lot of value. Now, why did I tell you this entire landscape? Because this will help you put Jubilant FoodWorks onto the map of this ecosystem. What you can categorically see is that Domino's in the past used to be very good in terms of delivery. It literally pioneered the 30-minute delivery service in India, and it became one of the fastest growing chains because of the delivery innovation that it undertook. But unfortunately, now this logistics based businesses, for example, Zomato and Swiggy, have turned this game entirely. They are taking away this delivery market share. So brands like Domino's are struggling. Now, recently I made a video on 10-minute delivery system, that why has Zomato invested in this 10-minute delivery system? Why Swiggy is also experimenting with that space? And if Zomato and Swiggy are able to crack this model for hot food delivery space, something like Domino's is going to suffer even more. So which impacts the Jubilant Foodworks stock. Now you will say that, okay, fine, Domino has a very big brand. It has an omni-channel presence. So people might go and want to eat at a Domino's restaurant also. And I agree. But the problem now that is happening for Domino's is that it is witnessing a lot of competition in this traditional food space where people sit, come and eat. And the traditional restaurateurs, they want people to come and eat because that is how they are making money. But Domino's does not command a lot of profit margin when people come and eat. They command more profit margins when they deliver. Why is that the case? Because Domino's over time is trying to shrink its store sizes so that it can save a lot on rent. So now I hope that through this short discussion, you will get an understanding of where Jubilant Foodworks is standing, and especially the Domino's brand. So with that viewpoint in mind, let us start the second section where I will speak about the pros and cons of this stock. Now there are three specific advantages that Jubilant Foodworks enjoys. The first key advantage is that it has a very strong brand behind it. For example, Domino's is a very, very strong brand. No doubt about that. The brand recall value is massive. So as a result, and check this note from the management, and you can clearly see that back in 2018-19, that Domino's started to lose a little bit of its market share, but because of its high brand value and high customer recall value, Domino's again jumped up and it started gaining more market share. So it is not easy to beat a company like Domino's when it comes to brand recall, and Domino's will for a very long period of time stay as a very good, strong brand. Now this narrative is supported by the fact that the food tech industry is going to grow and become very massive in a country like India. Why is that going to happen? So the estimates tell us that in the next 10 years, the average income of Indians will grow from $2,000 to $4,000. As a result, the discretionary income that people have, discretionary means free income that they have, it will go up. So people will start spending more money in terms of eating outside. They will order more. All that good stuff will happen. And companies like Jubilant Foodworks will be direct beneficiaries of this trend. So this brings us to the second key strength of Jubilant Foodworks, which is that it is expanding quite aggressively. It has created Dunkin' Donuts, which is a very strong brand, and these are some of the other brands that it owns. It is also bringing Popeye to India. So Popeye is a very big chain which competes against KFC, and it is into the fried chicken category mostly speaking. And there, if they can compete with established brands like KFC, they are going to make a lot of money in the process. So that is the understanding, and there are very clear expansion opportunities for a company like Jubilant Foodworks. They are also expanding internationally. They had plans to expand to Sri Lanka. It might be on hold as of now, so we'll have to check. But the bottom line is that the company has international expansion ambitions as well. Third and final strength of the company is that it has omni-channel presence. It means that it has specific retail outlets. It has restaurants, physical restaurants, for all its major brands. For example, Dunkin's has physical restaurants. Same applies to Domino's. So that is the physical part of it. When it comes to logistics space, Domino's is very good in terms of delivering stuff to your home. It might not be as good as Swiggy or Zomato, and it might partner with Swiggy and Zomato, but independently speaking also, it is very good when it comes to building this logistical backend. It is also very good when it comes to digital acquisition and reaching out to customers digitally. So it has played that game long enough in India to understand how this ecosystem can be shaped. So its presence across different channels gives it a lot of strength. Problem, however, here is that it is not exceptionally good in any of these key criteria now. It was average in the past. It reaped a lot of benefit. But now you have like specialized players like Zomato, Swiggy, which are coming up in the logistics delivery space, and they are taking away market share from companies like Jubilant Foodworks. So that is precisely what is happening, that yes, Jubilant Foodworks has omni-channel presence, but that it is not doing exceptionally well in any specific sub areas within this omni-channel. So there are 5 specific problems that the firm has, and you as an investor need to decode these problems a little bit. So first and foremost, the company has started to take more and more debt. It might be because that they are bringing new brands and are trying to escalate their presence. So as a result, the company is taking on more and more debt, and here you can check the numbers. The second key weakness of the firm is that the CEO has recently resigned and he will be quitting the operation sometime in June. So which is a sad news, and a lot of rating agencies have downgraded the stock from this particular piece of news. Their viewpoint was that Jubilant FoodWorks was already commanding very high premium in the market. Now, since the CEO has resigned, we don't know in which direction it will go. So there will be short-term pain with this stock. And it has already been factored in to a very large extent. The third point is that the competition in the QSR segment is exploding. It is not just growing, it is exploding. So let me show this to you, that if you check this, that in March of 2016, there were 1097 quick service restaurants as per the estimate. Now, year on year, these numbers have been increasing despite the pandemic coming into the picture. So as a result, brands like Domino's, brands like Dunkin' Donuts are facing a lot of competition, not just from international brands, but also from local players. The fourth point is that there is a lot of uncertainty regarding how Zomato is going to shape up its operations. Over the last 6 to 8 months, it has not been clear what exactly Zomato is going to do. It is entering into a series of different businesses, cloud kitchens, exploring different expansion opportunities. So this creates a lot of uncertainty to what extent an established company like Zomato is going to go head on and compete against the business model of something like Domino's. Now, in case it comes up that Zomato is going to undertake a lot of expansion aggressively in terms of launching its own homegrown brands, then Zomato can come out on the top. Why is that the case? Let me explain that very quickly. So basically, in case of Jubilant FoodWorks, what they are doing is called as non-umbrella advertising. They are trying to build brands separately. For example, they will build Domino's, then they will go and build Dunkin' Donuts, then they will go and build Popeyes. Now these are not related to the core brand called as Jubilant FoodWorks. Many of you might not even know that Jubilant FoodWorks owns Domino's. So as a result, there is no central brand around which all these different companies are aligning. Flip this example and try to see it from Zomato's case. That in Zomato's case, they can do something called as umbrella advertising very easily. For example, if Zomato starts its own brands and call it Quick Service Restaurant Zomato 1, right? Then QSR2, so on and so forth. All these brands will have a very strong confluence with Zomato because you know the parent brand. So as a result of this market positioning difference, Jubilant FoodWorks has to undertake a lot of expense in terms of its marketing. Let me show that to you also. So you can clearly see from this particular graphic that the marketing spent as a total percentage of sales for Jubilant FoodWorks has been going up. It has been going up at a crazy rate. Why is that the case? Because Jubilant FoodWorks has to spend a crazy amount of money in terms of building brand awareness for Zomato. Now they are bringing Popeye, so they will have to spend again crazy amount of advertising money to build the brand of Popeyes in India, so on and so forth. So this is the basic problem of doing non-umbrella based marketing, that a company as it grows, it finds it hard to grow beyond a point because their marketing expense becomes extremely high. Now, fifth and final problem with Jubilant FoodWorks is that it might not be as innovative as the situation demands them to be. For example, when it comes to 10-minute delivery, is it Jubilant FoodWorks that is experimenting with that model, or is it Zomato? The answer is Zomato. Whose delivery will you consider to be faster, better? Probably Zomato. Again, if you take a look at the data analysis or machine learning, artificial intelligence capabilities of something like Zomato and compare it with Jubilant FoodWorks, who do you think will be able to run better predictive models? It will be a company like Zomato over Jubilant FoodWorks. So what is the summary and the key takeaways that I will present here? So first and foremost, you must understand that the narrative that India's economy will grow from an average income of $2,000 to $4,000, that is correct. Food tech market is going to grow, no doubt about that. Second point, that Jubilant FoodWorks will also find its place. Is it the best possible stock that you can invest in as of now? Just because the price has corrected, I'm not going to invest in Jubilant FoodWorks as of now. It might very well go up. I will wait and watch. Because right now there are better players available in the market if you're looking to invest in the food tech delivery space. Does that mean that Jubilant FoodWorks is a bad stock to own? The answer is no. My only problem with this stock is that the growth rate at which the company will grow, it might be slow given all the challenges that I've spoken about. The next point being that which stocks would I rather go and pick? So my bet will be on two stocks. One would be Zomato. I'm closely looking into it and I've started to take some little positions in this stock already. I will show you as to why have I decided to make some bit of investments in Zomato as of now. I will explain the viewpoint in case there is enough interest. So let me know in the comment box in case you would want me to do that video. A related stock would be something like an umbrella marketing concept, which I feel something like McDonald's is doing very well. So that is another stock where I will consider taking some positions, and you can definitely check out Vested for it. You can make certain investments in it. Why? Because McDonald's is a great umbrella organization per se. It is able to build its own brand and expand upon it. So it is not facing challenges of creating a series of different brands where it will have to spend insane amount of money to generate that brand awareness. So therefore, I feel that something like McDonald's would continue to do really well in a country like India as the income levels grow. Now, in case you're already an investor in Jubilant FoodWorks, it's not a bad stock. The only issue with this stock is that right now it finds itself stuck somewhere in the middle. If it can become innovative enough in the next few years, it might be able to give increasing competition to brands like Zomato. It can build strategies to build its next phase of survival. But as of now, it doesn't look to me that there is a very clear plan in place. So my advice would be to look at the business model. And if you're getting the confidence that, okay, this company can fend off competition, then stay put with the stock. Otherwise, you could decide to sell some position in it. I hope you enjoyed the video. Please press the like button and I will see you tomorrow.